Hey, what's up, guys? Wanted to do a short video for you today, and I wanted to go over two things, only two, that I thought would actually help a few people out there. Well, really, the big thing is there's one thing, and then out of those one things, there's two things. So the number one thing is there's a difference between being a real estate investor and being an investor. All right, big thing. So if you're a real estate investor versus being an actual investor, there's a big difference in these two components, right? So, for example, I'm a real estate investor. I actually source deals, find deals, and I'll show you. Basically, I'm going to do like really just this split chart of where the benefit is, because I think most people have this piece confused. Really, as a real estate investor, really a real estate entrepreneur. You use real estate as a vehicle to either you create your business around it, whether you have an LLC, whether you're buying properties and you're buying them and selling them. You're an entrepreneur in that space. You're not really a real estate investor, right? But here's what happens. So, for example, I use us, usually when I talk to my investors, they're like, what are we getting? So I'm like, look, I'm finding the deals, I'm finding them, right? So I have to find the deals. So I'm always going out talking to brokers. I'm driving properties. I look at, oh man, thousands of units a week. I'm always looking at deals. I'm always either on spreadsheets, calling brokers. I look all across the United States. I look from California, Texas, Florida, Vegas, North Carolina, South Carolina, New York. I look in Oklahoma. I look in Texas, all the different states and cities that are right now prominent for the size of multifamily. So I'm always looking and finding deals, talking to brokers, just getting them to call you back is a challenge. You got to know what to say to these guys. So, and I'm also financing these deals, so I'm funding them, right? So you got to go off and find funding, not just from investors. You got to also talk to lenders, not just any lender. You're not always just talking to your local regional bank. Depending on how big your deals are, you're talking to people who are, like one of my guys that I work with specifically. They did $3.5 billion worth of multifamily debt alone. And that was a slow year because, as you guys know, in 2023, man, the rates spiked up. They bumped quite a bit, right? They went from 3% to 7, 8, and 9, in some place for multifamily. So you have to know all the financing. Oh, speaking of, this is kind of the first draft of it, but I put together a multifamily equity fund and financing terms book. It has 150 terms that you're going to really want to know 100% on your way from going from 0 units to 1,000 units if you're a real estate entrepreneur, real estate investor. So you got to know that there's funding terms you're going to need to know. You're going to need to know who's lending money. Some may lend money in the market and some may have stock for multifamily. You got to know that. And that's not only talking to your equity partners, your equity investors, your JV partners, being able to share with them what you're going to do, the returns they can expect to make, the timelines you're going to do it, talking to the legal people. Like we have a fund. So I had to get with the SEC attorney, my attorneys, to be able to structure all the documents that are required. And like I said, some of the terms, private placement documents, are basically the documents that you have to structure to be able to raise money from other people. And all those terms are in the book. If you want the book, leave me a comment here and I'll make sure to get that over to you. So that's funding, which falls along the line of financing. And you have to do your due diligence, right? Or inspect. You got to inspect the property, which means you got to, if you find a deal, you got to drive the property, walk the property, not just the property itself. You got to do an inspection and your due diligence on the neighborhood, the location, the market, the population, the demographics of that demographic, the psychographics of the demographic. Psychographics basically is like, let's say you're in an area where everybody shops at Whole Foods and Sprouts, right? So maybe everybody there makes like $150,000 a year or 200,000 a year or 300,000 a year, whatever, or 80,000 a year, whatever the income is. That's the demographics of the income, or the income of the demographics. But they may all shop at like Whole Foods, Sprouts. Some of them may go to like Albertsons or Ralph's or wherever. Like that's psychographics. Like what also do they do? Right? And the site, like how do they think? So you got to also understand these things. Aside from just the properties, as a real estate investor slash entrepreneur, you're doing the due diligence on the property, and you're doing the due diligence of the market, all the people that are going to be renting from you. Why are they there? Jobs that are coming in. It's a lot of work. And you have to manage it. So now we're in the management phase. You're either managing the property or you're managing the property manager. That comes in a couple of different phases. You may be managing the property. So let's say you get a property, you're going to self-manage. You're going to have one person on site as a leasing person because you got to have somebody there. If you're in California, 16 units and above, you got to have somebody on site. Or you're going to self-manage. You're going to put your own team together. You're going to hire all these contractors or they're going to be on payroll for you. Now you have to manage the operations of this property, or you're going to manage the managers like we have to do. We're going to actually have a plan to manage a management company overseeing our assets and make sure that certain targets get hit. That's work. As an entrepreneur, you're getting paid to do that, or you're hopefully going to get paid to do that. It's not just I'm going to find a deal and I'm going to make a ton of money. It's actually a business, right? So now you have to manage your team. Manage your team, which means what? You got to build a team. Like for me, I know at some point we're going to be like, hey, as we continue to scale and do all this other stuff, we're going to take some of our accounting out, because we have a contracted accounting. We're going to move that accounting in-house. I'm going to put together our finance department. We're going to have somebody specifically in-house, and we're going to hire people. They're going to be on payroll, and they're just going to do CPA accounting work, a controller, which we have our controller, as well as just bookkeeping, period. That gets in all the information from our management company that we manage, and then it's going to push to our management team, be it financing, asset managers, portfolio management, as we start to continue to scale, fund management, somebody who's actually monitoring the performance of the fund with all the portfolios with the properties in the portfolio, making sure we hit return and distribution targets and stuff like that I set for our teams. That's a business, right? And this comes later. I won't use the big word. I was going to put disposition, but let's say we're going to sell or refi, which is another form of an exit. So if you're going to sell an asset, you're going to have to enter the market, which means we go right back to going back to a broker, getting pricing on that, making sure that the property is ready to sell. Selling a property or exiting an asset is, man, it takes a lot of work to do that too, because you've actually groomed this property to enter the market, but you got to make sure that certain things are also hit and it's ready to go. A lot of presentation, getting your documents ready, management's ready, everything's done. All checks and balances. Or you're going to refinance, which is similar. You got to prepare your property or your asset also the same way if you're going to refinance it, because now you're putting, especially if you're doing a cash out refinance, the bank wants to see that it is able to be recapitalized, meaning you're going to pull out your down payment or all of it or a portion of it, and they want to know that the asset is in good standing based on as if it was a whole new project, even though you own it. This right here is basically entrepreneurial work. Don't get it confused. Now, on the other side of this, if you're just an investor, you're going to write a check. You're not finding the deal, funding the deal, doing the inspections on the deal. You're not managing a management company. You don't have to build a team. You don't have to prepare to sell and refinance. You're really writing a check, and then you're just getting a check back. That's it. That's your job. You might have to get on some investor calls and updates, right? You'll get you're going to go online to your portal. You're going to check into your portal. You're going to see your performance. You're going to get your distributions on a monthly basis. You have your tax benefits, which is, that's another thing. For taxes, we have to set up the tax benefit stuff, meaning like if we're going to do accelerated depreciation, which it went from like 80 last year in 2023 to 2024 down to 60%, but there's some bill happening that may bring it back up to 100. That'd be awesome. But worst case scenario, there's still depreciation on a property that's passed through. There's partnership documents for the K1s that got to go to our partners. That needs to also be done by us, right? Much less than, and we didn't even write that. Aside from that, that's giving distributions. The distributions have to go out. That's a check that needs to be signed off by me individually to every investor that's going to go out. This is still warrants 100% of your attention. But if you're an investor, which is where I assume most people want to be when they think about investing in real estate, they don't think about doing all this. They do first, and they're like, oh, wow, that's a lot of work. But then they're like, why don't I just write this person a check? I'm still a partner or a JV partner, equity partner, which is what they typically are, right? And they're still technically owners, right? Inside of the LLC or inside of the partnership because they're partners, right? So you're still getting all the benefits without doing all the work. You don't have to deal with the tenants, the termites in the toilets. You're not dealing with roof issues. You're not dealing with insurance. Oh yeah, I can keep going down the line with writing stuff. You got to get insurance. We handle all that stuff on the properties. There's nothing that our investors, if you're an investor, has to do. But if you think about this, this is entrepreneur, CEO work, teamwork, all of the things that go along with buying an asset that's, 20, 30, 50, $100 million multifamily properties in a great location, great place, making sure that this all happens. This is the entrepreneurial stuff that I take care of. And this is what our investors can expect. You invest money, you get money, you get your dividends on a monthly basis, and you get your partnerships, K1s and stuff like that without doing all of the work that it actually takes to run this business. But I think people get confused in that. Everyone thinks they want to do this until they start realizing that it's really a lot of work. You can't do this sitting on the couch. There's no armchair investors, real estate people who are just cranking it out, not at a big level. I'm not talking about mom and pops or people who are just kind of like doing these little deals. That's not what I'm looking to do. I'm looking to create a multi-billion-dollar portfolio with our funds over the next decade. And you can't do that from the chair, sitting down. It doesn't work like that. But another thing I want to show you guys real fast. It's good, right? Now, if you take a look at, I think it was like, if you look at the CEO versus the investor, just make that up. And yes. And we'll just use this. We look at the CEO of Coca-Cola. I want to say, because I looked it up and I may be wrong. I think he probably made like what, 22 million. I think it was 22 million and maybe like 50 million based on bonuses that go along with his salary. This is his salary. He got that from running Coca-Cola. And then we look at Warren Buffett. Warren Buffett's an investor. I want to say Warren Buffett, last time I looked, he had 700, I think it was 700. Let me just look. Hold on, guys. Bear with me. I'll be quick. Warren Buffett. Made off Coke. Warren Buffett's annual dividend. Can you guys see that? I'm gonna pull it back. You kind of see it in the shadows, huh? That's cool. Can you see it? 736 million. That's what he made as a dividend. As an investor, you want to be this guy. You don't want to be this guy. That guy's working. He can get replaced. He may not get that. They could cancel some of his bonuses if performances are not up. The investor made more money than the CEO. So I think a lot of people have this backwards. Just like I said, you got to find the deal, fund the deal, manage the deal, get the insurance on the deal, manage the management team, put a team together to make sure that this all gets done, prep the deal to refinance and resell, which means more financing, right? And I'm not complaining about it. I've been doing that forever. I love that stuff. I love building a team around that. I'm building a company so you don't have to do that. So you can just be this guy, right? That invests money and kicks back. You might have to get on a few phone calls. You're going to want to share and show your family and friends and stuff like that what you've invested in. But it's a true money investment and you get a return on that. I wanted to do that with Bell Capital because I wanted to help the everyday investor get involved in some of the institutional quality multifamily properties that I always saw. I was like, dude, who owns that? And then later you find out they're owned by these groups and they don't go to little guys. They go to institutional players. They go to institutional companies. That's where they get their money from. I'm talking to the everyday investor like you guys because I want to do this with everyday people. I love that. And I think if we go and compete for these properties with the big guy and we can get these properties, it'll be the first time in history right now in San Diego County that you have institutional assets trading hands and it's owned by everyday people like me and you, right? So I thought that was important, but I wanted to make this quick distinction between real estate investors. There's an entrepreneurial piece that I think somebody who wants to be a real estate investor that has that investor term mixed up. Investors invest money. Real estate investors or deal guys like myself, we actually create companies and then we go off and find the deal, get money from our investors, and we do the work and our investors get a return on that. And then we get a piece of the upside that we create in the future. That's how it works. But I wanted to share that as a quick distinction. And now I just want to share that. So how much did the CEO of Warren Buffett, the CEO of Coca-Cola make? Let me see. Let's do that, man. I think I'm not I'm right on that. Let's see. How much did the CEO make? Yeah, 54. There you go. Can you see it? It's like small, right? Anyways, I don't want to bore you guys with that. 54 million. This is what it was with the bonuses and compensation pack. 22 million, right? In 22, and compensations actually figured out on the new calculations with 54 million. That's how much this guy makes. So 54 million versus 736 million. That is a huge difference. You want to be the investor, guys, not the CEO. I'm okay with making this right now because I have a big goal. But for you guys that are like, hey, I got 100 grand, 200,000, 300,000, 500,000, Vic, I'm accredited. I want to invest with you. I want to talk to you. We set up Bell Capital because I want to actually talk to people, right? Some of the bigger guys, they don't want to talk to little guys. It's okay, right? I do. I want to talk to you. I want to get to know you. I love doing what I do. So I want to work for you. So if you have money you want to put to work, let's talk. Go to bell-capital.com. You got to be accredited, but I still want to talk to you. Go to bell-capital.com. You can schedule a call with myself or somebody on my team, and we can talk about your specific situation, or you can go to invest, you can go to the get started or invest now, and you can go to the portal, sign and register, set up your account. You don't have to invest any money to do that, but you can now take a look at what we do have going on. You got to be accredited to invest. That's the only thing right now. It's an accredited only fund, but later I will have a non-accredited and accredited fund. And I really want to do that because I want to grow and expand. I don't want to always have to tell non-accredited people no if they're good people and they want to invest with me like you guys. I know some of you guys are. So I hope this actually resonated with you. The difference between being a real estate investor or real estate entrepreneur and being an actual investor is this. Here's what I'm doing. I'm going to find the deal, fund the deal, do the due diligence, inspections, manage that deal, manage the team, put a team together, prepare the property to sell it, to dispose of it, or to refinance and pull money out and still have to do all this again because we're going to keep it. Taxes, depreciation, figure all that out and pass all of that on to you guys. And you guys get the benefits of being a part of that by investing money and being patient and being a partner with me if you're a good person. So I want to have you. I want to talk to you. If you have a great attitude, I want to have you. If you have a bad attitude, we don't take people with bad attitudes, man. They're just rough to deal with. But I know 98% of the people that are out there are great people. And I want to talk to you, even to just talk, even if we don't invest together. I'd love to connect. So any way I can help you guys out, let me know. I hope you guys enjoyed this. Like this video, share this video, comment on this video. If you don't like it, give it a thumbs down. Don't be a hater and a hider at the same time. Subscribe to my channel. We're trying to get more people to the channel. I want to talk to you. If you have a comment and you want to get my thought on something that you want me to make a video about because it's interesting to you, put it in the comments. I'll make it. I will. I do respond, or I have somebody on my team respond, but primarily I pay attention to my channels, and I want to help you guys. So you guys have a great day today. Let me know if you need anything. Again, like and subscribe to my channel. Share this video if you can. Comment on it if you got something out of it. I'd love to hear your feedback, especially if you liked it. I want to make more videos, but I want to do I want to make videos about what you want, right? So, all right, man, you guys have a great day today.